Most traders enter too early or they enter way too late. But smart money, they wait for that sniper precision entry. These entries give us the smallest stop losses, but they provide the most profits. I'm Wendell from Spektrades, and in this video, I'm gonna walk you step by step on how to get the best sniper entries just like smart money. Without further ado, let's get straight into this video. Let's get into what is a sniper entry. The definition is a sniper entry is a precisely timed trade taking at the point of maximum efficiency. It uses minimal risk, like a tight stop loss, and provides the maximum rewards, a clean target path. Some key characteristics is that it occurs at a well-defined point of interest, such as a fair value gap, a order block, or a breaker order block. It's also usually after a liquidity sweep or a inducement, and it requires lower time frame confirmations, either a break of structure or a change of character on the 1 minute or the 5 minutes time frame. And for a quick entry formula is that we have a higher time frame point of interest, a liquidity sweep, a lower time frame market structure shift. This right here creates a sniper setup. As you can see in this chart format, price wicked up higher during our 10 a.m. news liquidity to sweep all these old highs right here, to then extend lower and giving us a lower time frame market structure shift. And this right here was our clear displacement. And on that pullback, right near our reclaimed order block, price left this inducement. This inducement is inducing this zone right here. So first we see that price wicked up higher to clear prior old highs or old lows, or maybe tapping into a higher time frame point of interest. However, price comes inside of the zone. Then we will scale down on the lower time frames, like I stated, either on the 1 minute or the 5 minutes to see these models happening, right? We'll look for a lower time frame market structure shift, a inducement near the zone. As you can see, this is a reclaimed order block, or we can label this a breaker, right? The last bearish candlestick before price extend higher. So you place your trade at the order block open and your stop loss at the candlestick wick. You see how we miss the big entry, right? The risk entry, but minimize it so we can get this sniper entry right here. Now we have a small stop loss, as you can see marked in gray, but we have the maximum reward, right? A full leg right here. We see price pull back to mitigate this order block, to then extend lower to clear these sell side liquidity lows and complete the whole sniper entry. Now let's get into 3 sniper entry models. First, we have the model 1, the sweep plus the change of character at a fair value gap. We wait for price to sweep the previous old highs or old lows. That's number 1. We enter on the change of character inside of a fair value gap zone. That's number 2. And we use the 1 minute to the 3 minutes time frames, or the 5 minutes, right? The 5 minutes is extremely important, right? In one of these examples, I gave a 5 minutes example, right? The 5 minutes is perfect. Either the 1 minute, the 3 minutes, or the 5 minutes to refine. And then for model number 2 is our breaker block reaction. Price hits a breaker block. Price hits a breaker block that is formed after the break of structure. The second thing we look for is a reaction candle that confirms the breaker. And then we enter at the mitigation of the breaker block. I'm going to give an example of that one also. And then for model 3, I just made some quick edits, is that we have our OTE and our inversion fair value gap, or just a regular fair value gap, in a order block and or a zone. That right there is one of our final sniper entry. We use the 0.62 to the 0.709 fib retracement for our OTE. Then we overlap the OTE zones with a fair value gap, an inversion fair value gap, a order block, or just a regular PD array zone. And then we enter on the lower time frame reversal inside of that inversion fair value gap, the order block, or that zone. Let's go over these 3 models right here, right? The first model is our sweep in our change of character at a fair value gap, right? First, we see price push down lower and give us a liquidity sweep of these relative old lows to then push up higher and give us a market structure shift. Then price leaves this fair value gap. That fair value gap is aligned with this breaker block, the last bullish candlestick before we get this liquidity sweep. So this right here is one of our powerful models. This is our unicorn model. I want to see price pull back to mitigate this fair value gap in this breaker and then extend higher and clear this old high right here. The unicorn model is one of the powerful models, right? I use this model really every single week that I'm trading. I kind of want to see this happen every single week. Let's get into our second model. This is our breaker block reaction. As you can see, price left this last bearish candlestick before we started getting this uptrend to come in and clear this old high right here, to then for price to display slower and giving us a market structure shift in breakup structures of these old lows. But where did price pull back to? Price pulled right into our breaker block, right? This is the breaker block. Price pull back and mitigate the low of the breaker. Your stop loss goes at the candlestick wick and you're targeting these prior old liquidity lows. This is our breaker block reaction. And then for the final model, this is our model number 3, the OTE plus our certain PD array, whichever one it may be, right? A fair value gap, inverse fair value gap, or just a regular order block zone, right? So for this one, we see price push down, give us a liquidity sweep of these lows to then extend higher and giving us a new dealing range from the low to the high right here. So always anchor your Fibonacci from the low to the high, right? From the low to this high right here. And as you can see, right inside of this 0.709 zone, it was aligned with this order block. Price pulled back right inside of this 0.709 to then extend higher for our 126R target. But these right here are our 3 sniper entry models. Make sure you pause the video and take notes, or just take a quick screenshot of this right here so you can have it for later in your trading. Let's get into the full strategy, the sniper routine, the step-by-step plan. The first thing we do is our higher time frame prep from the 1 hour to the 4 hour time frames. We mark the major fair value gaps, the major order blocks, and major liquidity pools. We also define the daily bias with the DXY and also market structure. The second thing we do is that we wait for price to hit a certain point of interest. We're patient. We're not jumping the gun, right? We're looking for signs of liquidity to be taken. Then the third step is our lower time frame confirmation. We drop down to the 5 minutes to the 1 minute time frame, and we're looking for a breakup structure of or a change of character that confirms our higher time frame zone. For the trade management is we have a clean take profit. This is the next clean liquidity target. And we also take our partials on the first move and we scale in if it's necessary. This is a quick clue also. It's not often that we get sniper entry, but they're 100% worth it when you get a sniper entry, because one sniper setup can do more for you than 10 scalping trades, right? Because if you find one good sniper setup, that can pay you way more than if you're looking for a trade every single day. That's the main reason me personally, I position myself every day to show up, but I'm not trading every day, right? I'm not taking a trade every single day. I'm waiting to see if these sniper models come up, because one of these sniper models can pay me more than if I'm just gambling the whole week. Let's go over this simple model right here. This is our, right? Make sure you, if you remember this model, this is our sweep plus change of character or market structure shift at a fair value gap model, right? This is our sweep plus our market structure shift in our fair value gap. ICT also labeled this the ICT model 2022, right? If you know that right there, then you're gonna automatically understand this one model, right? This simple model is the ICT 2022 model, the sweep plus the change of character. First, we see price push down lower and give us a liquidity sweep inside of a higher time frame zone. I'm just showing the model right here, but all these models have to be played inside of a higher time frame zone. To then price rallied higher and give us a market structure shift of the high that did that liquidity sweep. Price will then give you a fair value gap, sometimes 2 fair value gaps. You see price give you this fair value gap in this other fair value gap. We've learned to always use the first fair value gap, right? The second fair value gap, if price push down all the way down to the second fair value gap, this trade is probably invalidated, because price is just looking for a quick reaction inside of the first fair value gap to then extend higher to clear this final draw on liquidity. But this right here is how we catch our sniper entry models. They're super simple, and super easy to execute, but they require, like I stated, a lot of patience, right? I hope you are enjoying this video so far and taking a lot of notes. Let's hop on the charts and see exactly how we execute these models live in action. Now we're on our charts. We see price rallied higher and gave us a liquidity sweep of this 4-hour-old high right here. Once we get our liquidity sweep on the higher time frames, like I stated, either we're looking for a higher time frame zone to be tapped into, or for price to clear a higher time frame high or a higher time frame low. Now let's scale down to the 15 minutes time frames to see even more price action. And now on the 15 minutes, this was our 4-hour-old high. We see price pushed up higher and cleared this old high and our 4-hour-old high that we had, to then push down lower and give us our market structure shift, all on the 15 minutes time frames, right? But just like I stated, we're looking for the sniper entry, the entry we can use to minimize our stop loss to then get that sniper entry for the bigger profits. So on the 15 minutes, what can we see? We see price left this 15-minute order block right here. This is the 15-minute order block. So this is going to be our higher time frame zone. I want to see price pull back to mitigate this zone and give me a lower time frame market structure shift. And then I'm going to catch that sniper entry to then continue lower to clear this old low right here. So let's scale down to the lower time frames. Scaled all the way down to the 1 minute time frames. We see price rallied higher and mitigate our 15-minute order block to then push down lower. And now we have a 1 minute market structure shift. And price also leaves this fair value gap near our market structure shift. Place your trade at the fair value gap open and your stop loss goes right at the candlestick wick. And I'm targeting the same prior old highs we had on the 15 minutes. Let's play price. As you can see, price pulled back and mitigate the fair value gap. It retested not once, but a second time, as you can see right here, even a third time, to then extend lower to clear this old low right here. As you can see, you could either have taken the 15-minute risk entry, right? Or you can take the or you could scale down to the 1 minute, the lower time frame, to get that sniper entry. Look how small your stop loss is, but look how big the profits are. Let's get into model number 2, the breaker block model. We see price was in this downtrend, but left this 15-minute fair value gap, and also this prior old high right here. So price rallied higher and cleared this old high and mitigate our 15-minute fair value gap. Now on the 15 minutes, we have a second liquidity sweep inside of this zone. We have a liquidity sweep, and also price gives us this breaker structure of this old low right, all inside of our higher time frame zone. So now we have our liquidity sweep and our market structure shift. Let's scale down to the 3 minutes time frames to see more price action. Now in the 15 minutes, you can see that the first entry, right, this right here was 37 pips, right? 37 points for price, this first original entry. But what if, right, we didn't want to take this whole entry and place our stop loss above this fair value gap? After price gives us this liquidity sweep in this market structure shift, price has left this 3-minute breaker order block. This right here is our breaker, the last bearish candlestick before this liquidity sweep. So this was the last bearish candlestick before price started respecting all these old lows to then giving us this liquidity sweep. So we place our trade at this breaker block open. You could either place your stop loss also right here at this at the breaker block high. That's if you want to be a little bit more tight, or just place it at the candlestick wick. For me personally, I usually place it right at the breaker block high, and I'm targeting just recent zones, right? This fair value gap is like my recent draw on liquidity, because the fair value gaps are like magnets, right? Price will pull to a fair value gap, but right, we don't know that if this fair value gap may hold to continue this uptrend. So I'm just gonna so I always target the open of these fair value gaps right here, or the 50%, whichever one you want to pick. So let's play price. Price pull back, tap this in, as you can see right here, right inside of this breaker, and boom. As you can see, price actually pulled inside of that 50% of this fair value gap. So this could have been a good target too. But me personally, I always advise you, right, if you want to make a fair value gap your target the open of that fair value gap, because you don't know if price gonna like react to it differently, right? It may just mitigate it to then extend higher. But this right here was our second model, the breaker model, right, where price pulled back inside of a breaker order block to fill in a certain drawn liquidity. Right here is our final model on the 15 minutes time frames. As you can see, this is a London kill zone trade right here. We see price rallied higher on the 15 minutes to clear these prior highs and then push down lower and give us a market structure shift. Then price left this order block right here. This order block was the zone that pushed down violently to give us this breakup structure. And on that pullback, price also gave us these inducement highs. So all we have to do is align our OTE. I'm going to remove it and just add it back on, right? The OTE is called our optimal trade entry. I got a video on that also, right? Grab your OTE from the high and place it at the low of the range, the new dealing range. This is the OTE settings, 0, 1, 0.62, and 0.709, and also 0.705, right? So we see price pull back and cleared these internal range highs and mitigate the 0.79, right? This is our 0.62, 0.705, and our 0.79, all inside of this 15-minute order block. But how do we take our trade, right? Let's scale down to the lower time frames, either the 5 minutes, the 3 minutes, or the 1 minute to see even more price action. Now in the 1 minute, we see price pushed up higher and mitigate the 0.709 OTE. And also, we see that price also give us a 1 minute liquidity sweep, as you can see right here, and a 1 minute market structure shift. Just like we stated in the prior slide, right? This is our breaker order block, the last bearish candlestick that gave us that liquidity sweep right here, right? So, and we also have this 1 minute fair value gap. This is another entry right here. Perfect. So, like, if you don't know which one you want to take, right? Just like I stated before, sometimes when I'm on the lower time frames like this, the 1 minute time frames, I'll take the 1 minute fair value gap, as you can see, because I'm already getting that tight entry already. So I'm not really too scared to use two zones, because sometimes price just uses the fair value gap to then extend lower, and sometimes price uses the breaker to then extend lower. When you're on these super lower time frames like the 1 minute and you see two zones like this, you really give yourself room, right? Like I usually give myself room. Like this is only 4 pips, right? So I really want to see price pull back to mitigate either the fair value gap or that breaker. My stop loss at the high right here, because this is a strong high. It took a liquidity and give us a breakup structure. And where I'm going to target, I'm going to target these old lows right here, right? These old lows, the prior lows that pushed up higher to get to mitigate this zone. Display price. Price pulled back, tapped us in. It filled in the fair value gap in that breaker. And boom. Nice and simple. So first we waited for price to tap inside of a higher time frame zone, this 15-minute order block, and mitigate this 0.79 OTE level. Just look at how much confluences we have for this trade. Then on the 1 minute time frames, we wait for a 1 minute liquidity sweep and also a 1 minute market structure shift. And we waited for this pullback for price to either mitigate the fair value gap or this breaker right here to then extend lower. These trades are super confluence filled. It's a lot of things added to these trades that makes them sniper entry trades. But this is it. I hope you got a lot of value out of this video. If you want the full PDF of this exact video, click the first link in the description and join the Spark Trading community, where you have access to a full library and a full trading course of me and my brother Arkham Trades, of all our PDFs and our free trading course, where we go over this complete concept. Make sure you like, subscribe, and comment down below any video suggestion or what do you think of this video right here. I love all of the feedback. But this is it. Spektrades out.